Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey everybody, welcome back to Big Money Real Estate. This is my Wednesday interview program on the Expert Real Estate Tips channel. I'm Ilyce Glink. I'm here to help you make the best money moves possible. Be sure to subscribe for weekly insight and tips from real estate and personal finance experts that I interview on the show. Today, Dan Goldstein is back to share another important consumer protection tip. He's the real estate and personal finance reporter for Marketwatch, and I hope everyone has checked what type of smoke alarms they have and child-proofed their televisions and stoves after our last conversation on protecting yourself from hidden dangers in your home. Since then, Dan's been following a story on companies that claim to be able to save you money on your mortgages through a technique called mortgage acceleration. But they're scams, or they could be scams. Dan's been reporting on what the Consumer Financial Protection Bureau is doing to stop unwitting consumers from falling prey to them. But first, I want to ask about a story that he wrote on a promising trend in the housing market industry, housing finance industry that you won't hear about from any other banks. Dan, welcome back to the show.
Hey, thanks for having me.
All right, Bank of Mom and Dad. This is the place of first resort in some cases, particularly for millennials who may not have the amount of credit that they need to be able to get a regular mortgage, or they don't make enough income. Bank of Mom and Dad have stepped up historically, but what's going on with that now?
Well, the good news is, especially for all buyers across the board, maybe not for first-time home buyers, but the number of home buyers and home seekers who are looking for help from the Bank of Mom and Dad is declining, and that's actually a good thing. Is that they're lending less money, and at the peak of the housing trough, or the bottom of it, as it were, nearly 1 out of 4 housing transactions had some form of gift from a family member, and now, according to the Federal Reserve, that's down to 12%, and that's pretty close to where it was before the crash.
So that would mean that credit has become more available, I would say, to millennials and to other people buying and selling homes?
Well, probably, and as we've seen, as more people have jobs and are able to build a little bit more of a nest egg, they've really been able to take these things for themselves. And one of the things that was very clear during the recession is millennials really took the brunt of it. They didn't have the jobs, they didn't have the credit. They were crushed by student debt. They didn't have enough money, either in income or job earning power, to sock away money. So the baby boom generation that probably made up most of their moms and dads did a heck of a lot better in the recovery because the stock market recovered so much, more than 50% since 2009, and their homes did well too. So they really were the source in a lot of cases for just that extra income that you might need for a down payment.
It's good to know. It's good to know we're making some progress somewhere in the housing industry. Now, about mortgage acceleration scams. In May, the CFPB brought a suit that you reported on against Ohio-based Nationwide Biweekly Administration, Inc. and Loan Payment Administration, Inc. Both were owned by a guy named Daniel Lipsky. There's other actions that the CFPB has taken, and what the CFPB has been saying is that companies misrepresented themselves to more than 100,000 consumers about the mortgage benefits of using their interest minimizers. So I've been writing about biweekly mortgages for a really long time and about how you don't actually need to pay somebody to do this for you. But this seems to have gone a step beyond. So tell us a little bit about what you found when you were doing your research.
Yeah, and this is really, the CFPB is really coming down on some of these companies that promise to make your payments for you ahead of time. And they're not just doing it, say, for mortgage, but they're doing it for credit card balances, et cetera. But really, just like you said, the only thing you don't need $1,000 mortgage accelerator, you just need an extra stamp. And what really the CFPB is going after is a lot of these companies that are promising mortgage acceleration by saying, well, we'll need one payment in advance, and then we'll do this every month for you. And the reality is that you can set this up with your bank yourself, either directly, or the other thing you can simply do is just calculate 1 month's extra payment over 12 months and simply add it, so you're making that 13. month payment. But these companies are taking advantage of people, and there's no question about it.
So the CFPB said that the companies that they had been investigating were lying to consumers. So telemarketers would call you on the phone. They'd get a homeowner who has a mortgage, and they would say to them, we can save you thousands of dollars a year, and most banks won't let you do this on your own. You have to use us. And that was a complete lie, right?
Absolutely, because most banks will do this, and they're certainly happy to have this because they're getting their money faster. And it simply means that, you're a better credit risk in that case because you're paying it down faster. And the other things too is that, like I said, you don't need $1,000 debit to do this from the mortgage company. All you need is an extra stamp or just being smart enough to make it every 2 weeks. Now, what the companies obviously said was, well, we know that, but you're going to forget. And most people who try to stick to a plan, they said forgot. But the thing is in reality, the CFPB was absolutely right. You really don't need this. You don't need a company to tell you when to pay a bill.
And what were the fees that people were charging for this? I know that typically you see stuff for $350, $450. That's a lot of money to be spending. You'd be better off taking that $450 and making another prepayment. But some of these programs, I think, were charging even more than that, right?
That's right. I mean, they were charging up to $900 or even $1,000 or close to it,
wow,
just for the privilege of basically sending your money to the bank. And in some cases, the CFPB came down on them because they really weren't. They were just simply holding it in escrow and then making the typical 2 payments. So that was a complete fraud.
Yeah, that's really unfortunate. Well, thank you so much for bringing it to everybody's attention again. We'll have the link to that story. I think you ran a bunch of stories, is that right?
Yeah, we did. And if I can say, I think the best thing to do is people, if they want to pay their mortgage down early, the best thing to do is to simply take that 13th month of payment and spread it across the 12 months, and then you don't have to worry about it. You make that payment every month, and you're paying the equivalent of a 13-month payment without even having to think about it.
I agree completely, and the only other thing I would say is make sure that you check off a box on your payment coupon that says to apply the rest towards the principal. One other thing you may want to do is write 2 checks out, one for the regular mortgage payment and one for the extra, and then on the check itself, designate that the check is going to prepay the balance of the loan. There are some banks out there that, for whatever reason, really don't want you doing that, and they make it really hard. So this is a great way for you to keep straight with your records, right?
Absolutely, and you can always check with your bank on how exactly to do that, and you're absolutely right, is make sure that you designate it as a prepayment on principal. And if you do it online, you usually get that opportunity to check mark or do a drop-down menu that says this is for principal only.
Yeah, which is terrific. Thanks, Dan, so much. That was really helpful. We appreciate you being back. And thank you for watching this episode of Big Money Real Estate. As always, you can send me your questions on Twitter and Facebook. I'll be happy to answer them on future shows. Share this video all around, folks. There are lots of people out there who could really save tens of thousands of dollars over the life of their mortgage by learning how to prepay it. We'd love to show them how and link them up to Dan's story so they don't get taken. If you want to learn more about real estate and personal finance, check out some of my cool products at the thinklinkstore.com or at thinklink.com or at ilyceglink.com. See you next time, everybody. I'm Ilyce Glink.